Okay, everybody, and welcome back. We're going to go, spend this second half hour working on the majors. Basically keeping the same break schedule that Blake had. 25 minutes later, take another break, and then a few minutes right before the release of the NFP data, the break. For those that are just coming in now, I already finished the bias chart, and the reason was with NFP data, I didn't want us to be crunched up against the clock. So this way, someone saying, well, you never got a chance to look at the peso or the Swedish krona. So it's already done, and then what we'll do is we'll spend some extra time looking at why or what we have this level for. So what we'll probably do is we'll move the bias chart where the 2-hour charts are, and then we'll kind of work hand in hand with it. So let's go and move into the 2-hour charts. This next half hour will just be on the majors, and we'll focus on and what we'll do is in the following half hour, then we can go on and take a look at gold and bonds or whatever. As I mentioned, the first half hour, generally we'll just go on and look over or talk about what moves materialized overnight, maybe any economic reports that came out of Europe. What's the outlook for the day? We'll generally cover at least one, if not maybe 2 news stories to give us a bit of a flavor or theme for the day. And then we take our first break. And then we roll back into the second half hour, which we're in right now. We do the analysis of majors. As I mentioned, I've already finished the bias chart, and the range is a little bit wider to encompass or take into consideration, the volatility that we'll see with the NFP. So we're here at the euro dollar, and we've got 686 and 480, a little bit wider here, but I think we have to take that into consideration for the NFP. So let's go on and okay, let's see what we're looking at. So we can show here we've got 480 here on support. We talked about this earlier in the week. I thought, they could make a marginal move lower, but not a whole new leg. I was saying I thought that we talked about this even last month. I said coming into, although we had that run down or knockdown, but the run up in the dollar, inversely speaking, we saw that, right at the beginning of the year. But we were saying, hey, look, I think, people are going to start to prepare for, as the administration goes and comes in, the thoughts that there's going to be, crying about, the strength of the dollar, maybe even talk about currency manipulation. So I thought it'd be, it'd be tough for the dollar to make another leg higher, inversely speaking, the euro to make it a brand new leg lower. So we did make a marginal low, but not a whole new leg down. And we talked about this 568. And this actually did hold the market here. This is our bias pivot from way back in here. This actually, when we were talking about it yesterday, even goes all the way back to a year ago. We saw a nice little pushback that came back to the 486, which the 46 was the 38%, remember, of this move. And then the low was 482. And the market started moving higher. And we talked about on an intraday basis that looked like, the high would probably be like around, or not the high, but the resistance would be coming around 542. Now on our bias chart, we had it for 589, okay? And I said, hey, look, I don't even think we'll make it there. I think we'll ease up a little bit before NFP, but the squeeze that we saw in the bonds is what pushed the dollar lower. That was all this move was generated from the move of the bonds, just like the gold market. The gold market had already come into a very key area, as I mentioned to you, that 1181, 1183, but even though it tried to put, it was actually tiring, it couldn't help but push higher as the bonds, just kept clipping along much higher and exceeded our initial target. Our target in the bonds, where we were saying, hey, we're going to see a correction. I think we'll see a correction. The target was, and we can look at it later on, was 51.28. Well, we blew past that. I mean, that was actually, short-term resistance, but that was actually a target, which I didn't think. I mean, I said as we rotate towards a correction, but I didn't think we'll see that till like about next week. But lo and behold, we saw it before it peaked. But anyway, looking where we're at right now, we're going to have, if we were to get a strong number, coupled with wage gains, which like I said, I don't think that the NFP, I was seeing that yesterday, is that big of a deal. At least this month, I just felt it was anticlimactic because the moves already happened and there wasn't anything that's going to come out of the NFP that's going to change anything. The only difference will be is if we got a wage gain of 0.4, that might suggest, hey, we're going to see raises sooner as opposed to, let's say they thought 3. Well, you're going to see them boom, 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 possibly boom, 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 right after, each meeting right after that, raise. So that would weigh on it. So that's where we're coming up with this 480. The 519 is key on the 2-hour chart. We've talked about this, the significance of the 519. You see how the market that day rallied up all crazy, and look where it came back for support, 519. This 519 has already been in place. I didn't adjust it. These levels, I have them from way back when, and when I have these levels, I've talked about that before. What I'm looking for, because someone once mentioned, well, if it doesn't get here, well, then obviously it's going to stop here. If it doesn't stop here, what I look for is I use these levels to look for confluence. So I'll give you an example. Let's say that the euro takes off and we gun the stops here and we're up in here in this area here. We're seeing the 686. We're looking on the 30-minute chart. If that's coming at the same time that the bonds are running out of gas and they start working lower, then that's what I try to do is I look at a confluence, and there's areas, like if they're going to blow past this, we talked about this last week. We said, hey, look, our target is going to be, I think at the time the 61% was, we've made a new low here. I think it was like 676 or something like that, 674. It's a little bit adjusted because we made this low here. And that was our target. Remember, we said, hey, that's going to be our target if we go and get a correction of the euro. But we're probably going to see some pretty good selling into here. Now, we thought this was going to take place at the beginning of the year. And like I said, because of low liquidity, a lot of people got stopped out. But we saw it into the zone. So that's why I try and use these levels as where, if the bonds are now rallying higher, then chances are we're going to take another leg higher in the euro, which we did. We saw that here yesterday. So where do we run out of gas? So that's what we're talking about. Yesterday we had 589. So if you're looking here, you're saying, wow, where's my risk? If I go and take that short at your resistance at 589, because we didn't think it was going to get there, I thought, okay, we're going to run out of gas around this 542. But on our bias chart, we had 589. What's my risk? And so that's what you're doing is you're looking and you go, okay, well, my risk is probably towards the 624 here. That's my risk if I want to step in the trade. And then I'll be looking at, let's say, the bonds or gold. How are they reacting? How are some of the other dollar pairs reacting? And then make a determination, hey, it's a good time to take a short or whatever. So for today, our resistance is going to be 686. And I'll show you where I'm coming up with that here. Now, 672 is going to be 61%, which would take out this prior high. Now, like I said, I think that eventually we can work higher. We mentioned this yesterday. We said, hey, look, the euro's poised where it can go higher. I didn't think we were going to do this yesterday, but I think that we would work higher, but this move would start happening next week, where we start to see this move working higher and higher and higher. Same thing like in the bond market, and with the concerns, hey, the Trump dollar rally is over. I mean, the whole reflation trade, the whole thing, we start to work hard, but we obviously made that move now. So if we were to get 686, would obviously take out the prior high here, and we'd also be running right here into the 61%. Now, if you look here, you can see the 686 was pretty key here. You see that was a rally high. We fell back to our bias pivot of 568. Rallied back to the bias pivot of 568. And this 568 has been drawn from way back here. It wasn't updated for these. But you can see how well the 568s were held. We rally up here, and we fall back again to the bias pivot. Take it out by a couple of stops here, but we close strong here. Nice hammer bottom. We launch, and you can see here, this is where they run out of gas for the second time at 686. So you should see some pretty good selling here, and we'll take a look at a 30-minute to get a closer look. Okay, here's where we're at right now. And you can see that on the, one second. These screens are all set up differently with this new computer, so it throws me off. And I haven't bothered to mess around with these screens. I had enough other issues working with tech people. This is the last thing on my list of things to worry about. But they're not in order where I just go one across the other. And I definitely don't want to mess around with that anytime soon. So getting back to where we're at, this was the high, when we had that, some of the services were equating to almost like the pound flash crash, but this is going the other direction. So the high was 654. You see that here? So we talked about where's the resistance. So on the buys chart, we have 686. And that's where this coming up. It's actually, we got here 687 on the 30-minute. And you can see now, the thing is, by looking at it on the 30-minute, you can see a little bit more closely, as opposed to, let's say, even the 2-hour chart, how the play was going, how the market was trading at these levels. So, okay, so you can see here on the way down, you see as the market's falling apart, and we find support right in here in the 686 here. And eventually we came to the buys pivot, but our focus is not on that. It's like, how well has this worked? And you can see here, this run up here, run out of gas, we test it again, we come back, as we come through it, and we'll come this. There we go. As we come through this, you can see here that the market congregated here. You see how we already tested. Let's come back here, pull this out a little bit lower. You see how we came to the 686 here. And we come back, and then we come and test it. You can see here in this, it's not like this is a 3-minute or 5-minute chart. It's a 30-minute chart. Look how long they sat up there. And finally couldn't do it. We lose, and the wheels fall off the caboose. Okay? Just one moment. Okay, so you can see here, once we got past it, we congregated at 686. It's trying to look like we're going to have maybe a shooting star here, and the market just doesn't want to go any lower. But we're congregating here at 686, and then we launch up. And once we lose 686 on that burst here, then the wheels really fall off the caboose. Okay, so let's fast forward to where we're at right now. And there's our 686. Okay, you can see that here. Once again, laid it out here. The first foray to 686 fails. Come back to the buys pivot. We have 3 bottoms here to testing that buys pivot. Held up like a champ. We go up to the 686 and finally get knocked pretty good. Once we get past here, and I was showing you that's what we were talking about when I said we were congregating, which here is the 686. So our resistance is 686 on the euro, which would take out the high here, 654. It also confluences with the 672, which is a 61%. We've got 687 here. This was a pretty interesting level on the way down and traded, which is 709. But this 687, this whole area is going to be very good. This is kind of reminiscent, if you think about it, the same way the gold was at 1181, 1183. You see? So we come into the bottom part of the zone, and then there's this area here. But there should be some pretty good, people taking the other side. It would allow the stops to be taken out here. Anybody that's short and saying, okay, I'm going to put my stops just above the high, they can be clipped out. If we look at the high here, that comes in at 71. which is also a confluence with the 72%. I mean the 61%, 672. So that's what I'm saying. Anyone that if the data comes in stronger, and they want to, or I should say, comes in weaker, and they want to go and punch it up, you're probably going to come up here. And then you probably see, I would think you probably see a little bit of profit taking, some decent profit taking, and we'll have to come back down here, and the market will. My guess is eventually we'll have to come back down towards this 568 where the market can regroup itself. If it can hold that area, then the market will say, okay, well, we're in line for maybe a deeper correction, which would take us closer towards this 818. So that's where I'm coming up with that. We'll move back into the 2-hour charts. And we had already mentioned before, we have the 480. Like I said, the 519 was key on a 2-hour close. Okay, so they can dip below it. The 480 would allow us to take out this low, but I think we're going to find a lot of support in here if the data would come out, pretty strong. Let's go over this here and we'll move right into the cable. Well, actually, we'll go right into the cash dollar index, and we'll go into the cable. The analysis is going to be lengthy. Like I said, the bias chart's already been done. Pre-NFP, we still have more people to come in now. So I did the bias chart because, like I said, going to NFP, I thought it was important that we already have all the levels set up at this point. So if you look at the chart right now, for those who just came in the last 10, 15 minutes, the bias chart's already done. So you're ready to go. We're just going to go into each of the markets and give a bit of a flavor as to, hey, how could it go and play out? Why is it this? But you already have this set up. And then we'll take our break. We'll spend some extra time. We'll spend some time when we get back finishing or looking at the other FX pairs and gold and bonds. And then boom, we're off to the NFP. Hang on one second. Go on. So let's go and take a look here at the cable. We kind of touched on this before we went on the break. As I mentioned to y'all, let me pull this back in here. We've got, you see here, right there at the top there, support at 2288, resistance 2433. And I'll show you. As I mentioned before, so I switched over to a new computer. One of the things I lost was the cable chart, and I lost the Australian dollar chart. So, but I still have that other computer. What I do is I printed a chart off of it as I'm trying to just update that stuff. So I already had this before. So you can see this 2433 really did work out really well. I don't think we even looked at it or touched it that much yesterday. I know I didn't even have this level here, but I remember looking at my chart from the other computer. But for right now, even though it's come to that, despite the NFP, I'm still going to go with this 2433 being the resistance, which held it this morning. Once again, I'm just going through the touches. You can see here, high, high, low, congregation, low, 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 tested multiple times. We break through it, then it's high, high. We break above it, low, 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 congregation. So that's what I'm saying, the significance of this 2433, and it held it up really well. I'm going to try to stay on top of the stuff a lot better. Like I said, this week I've spent an ungodly amount of time working with tech people trying to get this stuff. Apparently, some of these software companies, I don't get it, but they have problems with Windows 10, which is the most ridiculous thing I've ever heard of. I've exchanged so many doggone emails and phone calls, and it's been really a frustrating week trying to roll over to this laptop. So, or not laptop, but I mean this new computer system. But anyway, so trying to stay, get all this stuff updated for next week and transition, because like I said, I lost for whatever reason, it didn't transfer over. But fortunately, most of the other charts did. So anyway, so here we are right now. So I've got resistance is going to stay at 2433, and support's going to be here at 2288. And what I'm coming up with the 2288, let's open this up a little bit. Pull this out. So you can see right here, we've got the low, the close, right there. So that's basically 23 or 2302. But my take is that they could easily overshoot that, obviously with NP. So I would like right in there, which is going to give us about 2288. So let's look at that. Actually 2286. And you see that holds this low here, and you got these nice touches coming across. So we can change this to make it 2286. Only change it 2 pips, but it shows you where I'm coming up with this. I mean, really, this area is going to be good here. This 2302, let's 03, whatever. But we can get past that. I don't think we necessarily go all the way down here, but I think right here, I have a nice little congregation there. Comes in at 86, 88, whatever. So that's what we're looking at it on the cable. We'll take a look at the dollar CAD. And on the dollar CAD, we have 31.71 and 33.10. You remember we had this 32.56, and that held it to the pip. And we talked yesterday about this 33.10. But here we are now. It's going to be the 33.10 is still going to hold, and the 31.71. I mentioned, spent a little bit of time talking about this earlier. My stuff is more short-term oriented, and I have to mean it doesn't necessarily have to be a day trade or something like that. But this whole column is really subjective. If you were to look on a daily chart, you'd probably say, wow, the dollar CAD is extremely bullish. Are you crazy? But on a shorter term basis, we're looking on a 2-hour chart, which is that short term. You'd have to say, hey, look, it looks bearish. They'd be fading against throughout this year, and we've been expecting that, correction in the dollar. And we got the bonds right now still close to these highs. The movement of the bonds has been unbelievable, but that's was also working against the dollar. So resistance is still going to be here at this 33.10. You can see all the touches. Like I said, it's not like a broken record, but I like to do my resistance. It actually comes all the way from way, 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 way back.